Yash, thank you very much for that exhaustive kind of setup. We have with us Nilesh Sate, is former member of the Insurance Regulatory and Development Authority. He, of course, oversaw the life business regulations. Jigar Mistry is co-founder at Buoyant Capital. He's an investor, runs money, and he's been an investor in insurance companies in the past. Gentlemen, great to have the both of you here on CNBC TV18. Okay, Jigar, since I have you, I have to ask this. The RBI decision and hikes today, out of the blue hikes today, I mean, that is all that anyone in the market is talking about. What does it do for the LIC IPO? Any thoughts at all? Does it do anything at all? Or, I mean, this one will do very well nevertheless. Go on.
Hello, Shant. Hello, Satya sir. Thank you for having me. Prashant, I'll say, the India's curve was essentially pretty much the same, like you've seen the 210s in the US invert, the 310s in the, 315s also invert. And essentially, when we were last talking, we did discuss that the India curve cannot be disjointed from the US, hasn't. To that extent, you were expecting the RBI to come in and, take some hikes eventually. What it has done is that, the midterm meeting and it's taken the market by surprise. I think it's a much effective tool as far as it relates to inflation control, cooling down asset prices as well. I think that is to a certain extent, par for the course when you take the larger picture into account. That is something, par for the course. LIC IPO with, the revised numbers that have come through looks reasonably good to us. So I don't think it will put a spanner beyond the point. It has taken the market by surprise. We've seen markets correct 400 points on the Nifty today. But I think it doesn't do much for the IPO per se.
Jigar, we've seen the anchor book, very strong subscription there, but mostly domestic focused, not very much foreign focused. Is that kind of broadly, as someone earlier pointed out, because foreigners have not been great buyers of, listed stocks as well. They've been a bit risk averse, whereas locals, of course, have continued to buy. So the same trend showing up in this one as well, or should we read a little deeper into this domestic versus FII indication in the LIC anchor book?
I think, Prashant, both the things are relevant. FIs have sold close to $30 billion. Of the 600 billion that they own, a 5% sort of withdrawal, given the geopolitics of the situation that is being dealt to us, doesn't look like a whole lot. At any given point in time, any asset manager will be very happy to take a 5% cash calls. And I think if that is what is happening, then, it's not a case for a huge alarm to begin with. As a percentage of free float market cap, it's, I think, ranging to 3% for the month cumulative. And that looks like a larger number, if you look at the recent history. So, yes, it has been, the stocks have been on an onslaught to that an extent, and that needs to be taken into consideration. Now, while we are dealing with LIC IPO per se, there is a little bit of difference in how the private insurers are, the structure of the private insurers book versus the structure of the LIC book. More agency heavy business, more par heavy business. And I think, they might, even at reduced valuation, might want to see how, the game is eventually changing. Because if you look at the past few years, it might appear as if LIC is losing some business to private insurers. And many would want to draw references to the PSU versus the private debate in the banking side that we have been witness to. I think that is a flawed consideration as far as insurance is concerned. There are a lot of points why LIC stands out in the insurance space. And unlike banks, which tend to lose a lot of capital with bad underwriting, the underwriting for LIC has been reasonably good, as evidenced from the persistency numbers, as evidenced from the claim settlement ratios. So I think there could be a little bit of flawed understanding on how one should go about valuing LIC. And with time, I think FIs might get interested. The space is, mind you, very, very interesting. Life insurance penetration is not all that high in India. And therefore, a listed space, a listed large company like LIC might be very interesting to a lot of foreign shareholders eventually.
You know, on that point on how to value LIC, it all boils down to the embedded value, right? And there has been so much talk about this one. Yeah, Jigar, you want to come in briefly?
Yeah, Prashant. So, 6 or 7 lakh crore, which is a far sort of a reduced number versus what they were initially thinking. Now, if you look at the embedded value, that itself is somewhere closer to 5.4 lakh crore, right? So, you're essentially buying one of the largest businesses for an incremental growth value of, say, 1 or 1.5 lakh crore, which one should equate to the value of the new business. Now, Satya sir is exactly right in saying that the renewal book is reasonably strong, and assuming that gets captured into the EV, you're talking of the value of the new business as something like 4 to 5,000 crore each year. And when you compare the incremental number you are paying for that business, it doesn't sound very large. Now, as sir again mentioned, you're not in the value of the new business today, you are still not accounting for the change in the movement to shareholder business of the non-par book, of the par book, which is reasonably very large for them, right? It's almost 60 to 70% of APE. And therefore, your VNB could actually increase to a reasonably good extent. Also, the banca channel, as I mentioned in the start, could come in, and that could result in a higher VNB as we go ahead. So I don't think it is on a valuation like to like basis. It's a very high number to look at. The sort of traditional dialogue obviously has been that unlike when most private insurance companies took over, they always had separate sort of pools for the par and non-par books. And SBI in the process of getting listed, sorry, LIC in the process of getting listed had to make this bifurcation, and therefore it appears as if out of the blue they have given such a large embedded value to the shareholders and not to policyholders. One way to argue this is that the policyholders kept getting a reasonably large bonus sum, and therefore, IRDAI, with the kind of vigil they run this, would have been very clinical in terms of dividing this book, and therefore there is no reason to doubt the embedded value which the LIC has reported. So from that standpoint, I don't think a valuation number, as Yash was initially pointing out, 1 to 1.2 times is tremendously high, given where we see VNBs going in a couple of years.
Okay, no, absolutely. Take that point. Jigar and Mr. Sathe, stay with us. We have to take a quick commercial break, but we are back. A couple of more points on this large issue I want to discuss. Business-wise, we're back in just a bit. Okay, welcome back to this IPO corner. The biggest ever IPO in India is open for subscription and is doing very well in terms of garnering interest. We have Nilesh Sathe, former member of the Insurance Regulatory and Development Authority, IRDA, and Jigar Mistry is co-founder at Buoyant Capital. We've been talking about the various facets, largely on the embedded value, on valuations, and of course the response that it is seeing out there at this point in time. Jigar, so you highlighted a couple of points on, very briefly you alluded to the agency structure, the vast agent network, right, which basically completely dwarfs the number 2, number 3, number 4 players, and what it does for the company and what it can do for the company going forward. You want to elaborate on that?
Yeah, sure, Prashant. So, 95% of the business for LIC comes through agency. That's much, much higher than anybody else. Theoretically, the banca channel has been the least expensive for a lot of these insurance companies to grow. And 50% of all agents, are LIC agents. If you do a comparison vis-a-vis LIC, the agency business for LIC versus all other private guys, the LIC agents are 1.5 to 2 times as productive as a private sector agent. And, a lot of people will draw references that, look, LIC is a theoretical sort of PSU and comes with the baggage that we associate some PSUs with their operating culture. But the way we look at it is essentially, at the back end, the LIC could be a PSU. But at the front end, it's driven by the agency network, which is essentially very, very entrepreneurial. So therefore, you have a very nice combination of back end being run by a conservative sort of the way in which an insurance company should be run, and the front end which is very entrepreneurial and looking for growth. Now, obviously, this comes with its own set of costs. You see in VNB margins at 9-10%, which is essentially half of what the sort of private sector is. And that's where the incremental point that we mentioned came in, right? That because the banks are now asked to follow an open architecture structure, and eventually, when LIC does get listed, there is a reasonably good possibility that a large number of banks could also offer LIC product along with a bouquet of a lot of other life insurance policies they're selling, and essentially that could open up the room for LIC to reduce the cost on incremental business. The second point I was mentioning was on the product profile per se. So as I said, traditional PAR has been 60 to 70% of AP, the premium annualized premium equivalent, which makes the average ticket for LIC much smaller. But you see, over the last 4 or 5 years, we see the proportion of that trending lower. And NPR could actually become a very decent value driver as we go ahead. For a lot of new insurance companies, going into an NPAR can actually test with regards to their, actuarial assumption. Even if the MAD is reasonably high, you are likely to be tested based on what, numbers, bonuses that you guarantee. But for, a back book as strong as LIC, it could actually, propel its NPAR business much significantly higher than any other insurance company. So, tomorrow when we see LIC listed with, possibly a banca channel, possibly, some part of NPAR increasing, you could see a very different sort of business mix of LIC on an incremental basis, at least, vis-a-vis what we see the back book mix up.
Jigar, is a lot of hope from what I'm making out based on LIC kind of pivoting to some of the stuff that you're talking about, sort of adopting more bank assurance as a channel, and it'll have to do all of that under the public spotlight now, right? As a public listed entity. Mr. Sathe, is that a challenge at all to your mind? I mean, you've overseen that entity in your earlier avatar for a long time. Absolutely. Got that. Last time, Mr. Sathe, when you were on the program, two things we discussed was the very low float, at least to begin with which is going to be available. The other one, of course, was the risk of sort of regular stock sales. LIC is equity being like a go-to to fix any shortfall in tax revenues. And then government diktats with regards to rescue operations elsewhere and LIC being used as a vehicle. I just want to, with your permission, put some of those points to Jigar as well. And would any of this worry Jigar as an investor? Jigar, go
on. You're right, Prashant. So, one sort of part to look at it is that DIPAM has been reasonably smart in sort of approaching this. Had they flooded this with a 70,000 crore issue, given your first question as to whether MPC, changes the profile for LIC IPO, that would have been material. Now that they have come in with a 20-odd thousand crore, I think people were ready with a much larger checkbook. And to that extent, they are aware that eventually 3.5% float is way too low and that needs to be increased. Once it is, the floodgates open, and we had done an analysis before, as to what percentage of free float in the market, really takes the market down. And at that number, unless the new issuances, all combined QIP, FPO, IPOs, is not more than 1.5-2% of the free float, that level of absorption is obviously there. So you're right, it will be at the back of a lot of people where, the government could come in and tap it. That's one, area where people will be able to look out for, but I don't think that's an immediate area of concern, because today the 21,000 crore number is much better than the 60 or 70,000 odd crore that they were looking at. And, for a government to come and recognize that the market conditions have changed and actually halve the valuation in a period of 4 to 5 months is really commendable. Your other point regarding using this as a backstop arrangement for fixing issues regarding equity investments, I think if you look at the historical numbers, I don't think equity has been a pain point for LIC. If I look at how the LIC's value performance has been, the portfolio performance has been, overall over the last 30 odd quarters, they have done fairly well in more than half of those quarters. And therefore, the national duty sort of thing comes along. It did come along with Coal India for India. The national champion duty, I remember, was still associated with something like a Baoshan steel company in China. So some of these assets do carry national duties, and to that extent, the valuation multiple price to embedded value not being 2, 3, or 4 times is to a certain extent just a sort of justification to why these numbers need to be a little lower than everybody else. So I think the float concerns will be addressed over a period of time eventually when the liquidity conditions are a little more better than what they are today. And equity per se is not really a big challenge for LIC as we see the numbers on an overall basis.
Got that. We'll leave it there for today, that is. Jigar, it's an absolute pleasure. Thank you very much. Mr. Sathe, thank you so much for joining us once again with your perspective. Let's also